the main reason why we're here is because, as you all know, blocks are full. If you've been trying to make a Bitcoin transaction over the last few weeks, you've definitely noticed that transaction fees are through the roof. Yesterday, somebody made a transaction to me for 200 satoshis per byte, which is like 100 times more than what I would have made a month ago. And the transaction still took like 3 blocks to confirm. And 200 satoshis per byte is still only about a 20 Hong Kong dollar transaction for a typical transaction. But of course that means that for 200 satoshis per byte, we cannot walk into the Genesis block and just buy a beer. Because the 50 Hong Kong dollar beer is suddenly going to become 50% more expensive just because the Bitcoin transaction we made. And even if we're able to make that transaction, and even if we're willing to pay that fee, then it still takes a while just to find that block. And even if we pay the highest fee to always get into the next block, that next block might be 10 minutes away or it might be 30 minutes away. The limited capacity of a blockchain is really something that is inherent in the idea of a blockchain. There's not really a way to fix this solution. The only thing we can really do is to change these trade-offs. All right, we have the trade-offs between being cheap and being with high throughput, being able to make a lot of cheap transactions, or we have that trade-off of making the blockchain secure and making it easy for everybody to run a node, making it easy for everybody to verify, and essentially keeping the network decentralized. This broadcast model, right, where everybody in the world has to see, transmit, verify, and store every single transaction that everybody else makes is sadly not scalable. It's a pretty clever idea, and it's probably, and without this idea to function, none of the other stuff would function too, right? So like the Lightning Network still relies on the blockchain as a settlement network, but we can't rely on that settlement network to make payments. So the idea is, not just for the Lightning Network, but the idea for quite a few of these, what we call second layer technologies, is to use the Bitcoin network only for settlements. In a similar way that you wouldn't make a wire transfer every time you go to the shop, but we use payment cards like the Octopus card or credit cards to make these small payments. And then we accrue, either we accrue a balance or we accrue debt. And at the end of the month, or whenever that balance is going to zero, whenever the debt is going to large, we make a settlement transaction using a wire transfer or using a cash transfer to essentially pay up. And now Lightning is trying to be such a payment layer. So Lightning is not its own blockchain. It's not a blockchain at all. It doesn't have blocks. It uses an entirely different way to communicate and make transactions that I'm going to hopefully explain in more detail. And Lightning is supposed to function independently of that base blockchain. That allows us to move much faster, that allows us also to break things, but that also kind of changes the whole idea of like, what is a network fork in Lightning? What does it really mean to change the Lightning protocol? Because in Bitcoin we have this dependency that everybody has to agree to every little thing that we do all the time, right? It makes it very difficult to introduce any kind of changes. Anytime we want to have a slightly new transaction type or new scripting or new signatures, then we need to get everybody's buy-in. And as we've seen in 2017, that is close to impossible and leads to the community and the network splitting. Now with Lightning, my node can participate in multiple Lightning networks at the same time. My Lightning node would be able to function with older nodes, right? It would be able to communicate with older nodes that have not yet upgraded, while at the same time communicating with newer nodes, and make use of entirely different transaction schemes. And that makes Lightning a lot more easier to upgrade, without compromising that security of Bitcoin. So if you don't like Lightning, but you're super into Bitcoin, for example, because you believe Bitcoin is primarily a tool for us to store value, then you don't need to touch Lightning at all, and Lightning doesn't really negatively affect you. Other than that, it might make transactions more valuable. So now I'm going to explain how the Lightning Network functions in technical terms, and that I think all of you will be able to understand this. It does take a bit of engagement, and it does take a bit of prior knowledge about Bitcoin. But the prior knowledge that is pretty much the only really important one is that we know a bit about how a Bitcoin transaction works. A Bitcoin transaction, so Bitcoin doesn't have accounts. Your Octopus card has an account. So it's pretty much just a number and a balance. Your bank account is an account. Ethereum is also an account-based system. But Bitcoin uses what we call UTXOs, so transactions. It doesn't so much, so checks are actually quite similar, which is inspired by Johnson Lau. I use checks as an analogy. Checks aren't really an account-based system either. They're also transaction-based system. Each check represents a transaction. So if we think of this Bitcoin transaction as a check, then it has a date, the date at which it was made. It has a transaction ID, which in the case of a check would be the serial number of the check. But in this case, it's more calculated from the entire thing. It's a hash of the transaction. When your check would identify an account that it's coming from, in this case, we reference the previous, where the money is coming from. We don't reference that with a Bitcoin address, or we don't reference that with an account, but we reference that with a previous check. So this from address here is pretty much just the serial number of a previous check. So every time we pass Bitcoin to somebody, we need to reference Bitcoin that we've received or Bitcoin that we've mined, and then we can say, this number, I want to spend that now. And when we say we spend it to, then we use transactions, because these transactions define kind of how we then do the bottom part of how we sign these transactions. Similar to a check, a Bitcoin transaction has an amount. So you can see this is the old pre-halving Bitcoin amount. Maybe for today I should have changed that to 6.25. Alice is the one making the transaction, so she signs it. And in this case, Alice sets a condition. And this part, this bottom part, is what we call a smart contract. Of course, the Bitcoin smart contracts are very limited in their ability. They're quite primitive. That also makes them quite reliable and makes them very easy to test, and makes them much more bug-free, even though they're not perfectly bug-free in theory either. So in this case, we kind of like the standard condition would be whoever has the key is able to spend. Whoever has the key that hashes into this address is able to spend. In this case, we're creating a multi-signature address. So Alice sends 12.5 Bitcoins into an address that has the condition that both Alice and Bob need together to sign if they want to spend it. Really I have another screenshot of this here, it's a bit dark. But really this is what we have to keep in mind for the UTXO model. The UTXO model is also quite important when we want to understand whether Bitcoin is anonymous or not, or how our anonymity can be private, can be compromised. In this case we have two transactions. They're identified with their hashes. And both of these transactions have like a from part. In this case, the from part is a single previous transaction, so 0.02565229 Bitcoin. And in this transaction, somebody is splitting a transaction that they previously received into two parts. So now we can make a 50-50 guess that whoever is sending these Bitcoin is either making a payment of 0.015 or making a payment of 0.009, and then likely the other part is sending that back to their own wallet, right, as change. In this case, the opposite is happening. So somebody is taking two previous transactions, referencing two previous transactions to kind of combine them into one. So that could be somebody consolidating their inputs, or that could simply be somebody who empties out their wallet into, for example, an exchange. They might say, I have that many Bitcoin. That's actually quite a lot of Bitcoin already. It's like 150 US at today's prices. And so that person might say, I've received two payments in Bitcoin last week, and I would like to sell them for Hong Kong dollars. So I'm sending them together into this exchange. Now, when we when we use Lightning, what we're doing is we're creating payment channels. And a payment channel is a multi-signature address similar to a pot of money in a jar on the table, right? So Daniel and I, we might say, we are pooling our money. You have 10 Hong Kong dollars and I have 100 Hong Kong dollars. We put them together in a jar. For example, it's loose change. And then now we keep a spreadsheet of how much of that money belongs to him and how much of that money belongs to me. And every time Daniel, for example, takes one of the chips from the basket, he has to give me a cent, or he has to pay me a cent. And every time I take a piece of sauce from him, then I need to give him a cent. And so now every time, instead of making passing on a Hong Kong dollar forth and back, we just keep our spreadsheet and update this. So as a concept, these payment channels are jars of money that are standing in between two individuals, and they are keeping a separate spreadsheet of how much of that money in the jar belongs to who. And this works in Bitcoin quite cleverly, because we can do this in Bitcoin without needing to trust each other. So if we have a piece of a jar on the table, then I can still just snatch it and run away. Or we need to somehow like trust each other that we're not like secretly taking money out. But in Bitcoin, we can do this entirely trustlessly. So we can create this jar of Bitcoin without trusting the other party. So we're able to do that anonymously with whoever we want on the internet, without having to trust them, without having to be friends with them, because we're able to do that anonymously, they're also not able to so easily come after us and like hit us in the head and take our money from us, which like philosophically is an interesting property. And so we're able to do this by so in this case, we're creating a transaction, right? It again has a reference. It again has a destination, which is the jar address over 1 Bitcoin, but we're not signing it. So we're really just creating that transaction in preparation of making that payment. Because if we made that payment, if we signed it already, then what if the other party then runs away, right? Then suddenly we have money in a jar and we can't take it out anymore. So before we sign this transaction, we already want our refund. We already want our signed refund transaction. So in this case, Daniel is Bob. And Bob, as soon as he sees this unsigned transaction from me, right, you can see here the from part in this address is the transaction ID here. And so Daniel, before I even sign the first one, he will already sign my refund transaction. And that's how I can then safely assume that this money that I'm sending into the jar is safe. Because in the worst case, Daniel will run away or become unavailable. And then I already have the refund transaction, right? So in the worst case, I can just take my money back out of the jar. And this has some more interesting properties to prevent me from taking the money out of the jar immediately, meaning that this is now locked. So this jar has a minimum lifetime. It's a bit like a piggy bank that you need to crash to take the money out. But this piggy bank cannot be crushed. It's indestructible for, let's say, at least a week.
Excuse me.
Yeah.
What's this TXC? The first line. What is TXC?
The TX, this is in the serial number. think of it as the serial number of this transaction. Every transaction has its own serial number. And when we reference a previous transaction, we reference it by its previous serial number. So, yeah, transaction ID. The TX is just transaction. Sometimes call it TX ID, transaction ID.
Okay, thank you.
So now, right? So now Bob gives me the signed transaction, and now I can sign the first transaction, the refund transaction, and I can then finally put the money into the jar. So the settled part means I've now put it into the jar on the blockchain for everybody to see. But the refund transaction, I don't need that one right now, right? It would be pointless for me to refund it at this point, because all I do is I get my Bitcoin back, minus transaction fees. But now, so I own this Bitcoin in the jar. I have my refund transaction, but now I want to pay the other party. So I want to pay Bob now 0.1 Bitcoin. And I can do this just by updating this refund transaction to say, instead of getting a full Bitcoin refunded, I create a new refund transaction to get 0.9 Bitcoin refunded. And the 0.1 Bitcoin, this refund transaction, if it's now being executed, will now send 0.1 Bitcoin to Bob. And we can do this as often as we want, which is the really clever part. That we now have this jar that we can update as often as we want. We can update it every second, we can update it every minute, we can update it 1,000 times or 1,000,000,000 times. So in this case, right, Bob gets 0.1 Bitcoin from me being Alice, and then I'm getting 0.05 Bitcoin back. And we can do this again and again. And eventually we can say we no longer want to do business with each other, or we can say I need that 0.85 Bitcoin now I want to sell it on an exchange, or we can say I want to put that into cold storage. So now we can take that refund transaction and we settle it. And so now with only 2 Bitcoin transactions, we've essentially made 4. And that is like the basic concept of a Lightning payment channel. Of course, there are some like technical, interesting complications. For example, how do we prevent that this transaction that only gives me 0.85 Bitcoin, right? How do we prevent that I'm now spending this Bitcoin transaction? So there's a bunch of interesting tricks to prevent me from doing that. And the main takeaway is that for this to properly work, both parties need to be somewhat always online. And that's probably already the biggest trade-off between Lightning and Bitcoin. Because in Bitcoin, you can give somebody your address, and this address, this key can be like safely locked away in some ice vault somewhere in Antarctica, where no computer signal reaches it. And you can receive money and put money into that account anytime you want. But in Lightning, Alice and Bob they don't have to be online all the time, but they have to be online whenever they want to make a transaction with each other. They also have to regularly come online to see if the other party is trying to cheat them. So that's also somewhat of a limitation. Because in Bitcoin, if I'm on like the famous example is that I'm on a remote island and my internet cuts out, and now my Bitcoin node can no longer sync. But in Bitcoin, it's easy, right? Nobody can cheat me, nobody can take out my money. If I'm coming back online after 2 weeks or 2 months, then all my Bitcoin is still there. But in Lightning, if now Bob kind of finds out that, or if in this case, if Alice finds out that Bob is stuck in a remote island and probably not have any internet for the next 2 weeks, then Alice can try to spend that transaction. And there are, of course, a couple of tricks around that. So first of all, hypothetically, if they don't exactly know each other, then they might not know whether they are coming online again at any point. If they, just because their main server is not online doesn't mean that somebody else is not watching out for them, right? So Bob can say, my internet is really laggy, and I'm expecting a typhoon and there's not gonna be any internet on my island, but I designate this company or individual or server that I have somewhere on the other side of the Pacific to look out for whether Alice cheats. And that can also be done without really having to trust each other. So there's lots of these interesting limitations, but at the main benefit of significantly scaling the blockchain. Now, for this payment channel, so this idea of a payment channel is quite old. Even Satoshi was already like sort of thinking about it, and I think the first implementations were like 2013 or 2014. So the idea of a payment channel is quite old. The idea that's relatively new and maybe more revolutionary is to turn these jars into a network. So now I have a channel with Daniel, and Daniel has a channel with Max. So now I can pay Max through paying Daniel. And again, we can do that without having to trust each other. And the trick to that is something I would call the hash time lock contract. So that's a bit of, again, Bitcoin smart contract magic, but in short, it works by the recipient, in this case Max, creating a key, and that key is private. And now I'm making that payment to Daniel on the condition of that key becoming public, and Daniel will make his payment to Max condition on the same key being public. So in this case, because the risk so first of all, I have risk, right? Or in this case, Max has risk. What if I'm making a payment to Daniel and he's not forwarding it, right? What if he says, haha, you gave me the dollar and I'm not giving it, I'm not passing it on. But also you have the risk, because what if you're making the payment and you're not getting the money from me? So with this time lock contract, with the secret, you're making the payment that you're receiving that you're making to Max dependent on the same secret that my payment is dependent on. And so now this payment will either, so we call it atomically, right? There's only two options. It will either completely confirm through its entire path, or it will completely fail. So again, unlike in Bitcoin, this payment is either made or it's not made. There's no concept of a payment being stuck, or there's no concept of a payment being unconfirmed. And this is also a very handy concept, because it makes it possible for us to have a good idea of how much, for example, whether we've paid something or not. And so we don't have these problems like we do in Bitcoin, where we make a payment and then the exchange rate changes, and the recipient says, well, now I want more Bitcoin, and you said, but I already paid. You also don't have these problems of just not knowing whether a transaction will ever confirm or not. You have a very clear idea of which payments are being made. So we're trying to create a network where ideally everybody has 3 transactions with some random other person, and these payments are then being like routed throughout this, right? So in this case, I'm trying to use colors to denominate balances, and I'm trying to use bars to show the payment channels. So blue bar means Carol owes all the money in this jar. And here it's a split between yellow and violet, and here the yellow one and the violet one, they have roughly about half. So if we look between Bob and Carol, that's what it looks like for Carol to make a payment to Alice, right? Carol's bar gets a bit smaller and Bob's gets bigger here. And in this case, Bob gets smaller here and Alice's get bigger. So in this transaction, Carol has a bit less, Carol has a bit less, Alice has a bit more, and Bob's balance stays exactly the same, except that it's now in a different channel. Which again is another interesting problem to have, because now we have to, unlike in Bitcoin, we have to deal with all sorts of liquidity issues. So this is one visualization of the Lightning Network. looking at all the channels that Bitbank's research has. First I want to talk about benefits before I talk about all the downsides. So now the idea of how many payments we can make per second is pretty much meaningless now, because we can still only make 7 transactions per second in Bitcoin, but we can make this infinite number of transactions in Lightning. And Lightning is not so much limited by how many transactions we can make per second, but more the liquidity, or rather the capacity of the network is now much more important. We can make payments that are arbitrarily small. We cannot do that with Bitcoin. So if you're getting a sticker from us today, I think we're charging like 1 Hong Kong cent for a sticker. That's pretty exciting. We couldn't do that with cash. We can barely do that. I think we cannot do that with FPS either. But we can even charge smaller amounts. And even smaller than 1 Satoshi is theoretically possible, even though that also requires a few interesting tricks. We can finally make instant payments, which is quite important for just the user experience of making cryptocurrency payments, but also just the practicability. As a merchant, you don't want your payments to confirm forever, and as a user, you also don't want the ambiguity or having to wait. Right now, if I want to buy a VPN account with Bitcoin, I need to wait for the transaction to confirm. That's stupid. Why do I need to wait? Why do I need to pay such a high fee and then still wait 10 minutes, or pay a low fee and then only get my payment a day later? The fact that Lightning's based on invoices and addresses can at first be a little bit confusing. In the demo part, I show off a bit of how that doesn't have to be confusing, but from like an accounting perspective, it's incredibly beneficial to have invoices, because it makes it very clear who paid and who didn't. Right? In Bitcoin, you have the problem of underpayments. You have the problem of multiple payments for an address. You don't even know whether you have an address and there's half a Bitcoin in it, but you don't even know if this half a Bitcoin was requested. You don't know if it was overpaid or underpaid. In Lightning, you don't have these issues. I issue you an invoice over 100 Satoshis, and then you either pay it or not. So there's not really the case that I have a 50 Satoshi transaction and then, oh no, what do I do now, right? In Bitcoin, if you pay too little, then the merchant will have to then give you back that money or have to ask for more. That can be quite complicated. The previous attempts to fix the underpayment part, for example, was a complete mess in Bitcoin. If you've ever looked at like the Bitcoin is called the Bitcoin Payment Protocol. Currently, I think only in use by BitPay. Privacy is a lot easier in the Lightning network, partly because we don't make every transaction public, but also partly because we can much more easily transact with multiple parties through a single channel. And we can even hide our node, right? We can, so there are like, if you look at the total number of nodes in Lightning is theoretically public, but as a node operator, you can choose to make your node private. So if you're running a node on a mobile phone, like the ones that I'm suggesting on this piece of paper here, then actually it doesn't show up in the official statistics. And if you receive a payment, the other side doesn't necessarily know who they made that payment to. I think even for markets, like I'm a bit disappointed with how little Lightning is currently accepted by exchanges. Like Bitfinex somewhat has it, but it's also in a more experimental stage. So if I want to buy, let's say, yesterday I was looking at the Bitcoin transaction auction, and like if I had wanted to take part in that, like just buying like a small amount of USDC with Bitcoin, like I need to wait for all these confirmations. Why can't I just quickly deposit into FTX? There's lots of limitations too. I think the finding roots part has gotten incredibly well. So yesterday when I was like gathering all these links for the demo part, I was making payments from 2 server nodes and 2 mobile phone nodes. And over the entire evening of like 30 transactions, only 1 failed. So that part has gotten a lot easier, right? Me making from different nodes, payments to different nodes, and they very rarely fail. The liquidity is more of an issue. And the fact that if I have $200 in my Lightning wallet, that doesn't mean I'm able to buy something that costs $200. Because first of all, I need to have, for me to make a payment of $200, I need to have those $200 in a single channel. And people tend to open more like 2 or 3 channels, at which time the largest amount in any of these channels is now the largest payment they can make. So that can be significantly lower than their total balance. And the other reason is that for me to make a $200 payment, not only do I need to have $200 in my wallet in a channel, but that person also needs to have $200, and that person also needs to have $200 throughout the entire route. Let's say a Lightning transaction, so we can, if we make a transaction with the command line in our server, we can kind of look at what route it took, and it's quite cool to see, because a significant number of transactions make like 5 or 6 different hoops, right? Very rarely do you have a channel open with the individual that you pay. Most of the time, that person's on the other side of the network, and it still works. But it's not going to work right now for large amounts. And that's partly a problem that's going to solve itself just by Bitcoin becoming more valuable. But partly it's a really difficult problem of how to like allocate capital efficiently inside of the network. The fact that participants have to be always online is, I think, now that the Lightning Network is like 2 years old, 2.5 even, is a much smaller limitation than what we originally thought. So we do have servers, people tend to run servers. The Bitcoin Association has a server, and that node, keeping that online, I mean, hasn't really been an issue. I have a node running at home. It's running on a little box that's always connected to the internet. Yeah, who of us really turns off their internet when they leave the house? And for the mobile phone, of course, my mobile phone wallet is not online right now, but it doesn't need to route payments. It goes online when it needs to make a transaction, and then of course when I open a channel, I will open channels with companies or servers that are always online, such as the Bitcoin Association. The last part is something that got quite heavily debated last week as Bitcoin transactions became relatively expensive. Because even though we tend to give Lightning as an example to that solution of how we can solve large transaction fees for the individual, it still means that you need to open and close transactions. And depending on how the liquidity in the network looks like, and depending on how much capital you have to deploy, you might still end up opening and closing channels once in a while. And of course, if your channel opening costs $50 and you make 100 transactions, then it's probably worth it. But are we at the stage yet where we do make 100 Lightning transactions? And is the Lightning Network really stable enough for us to say, I'm going to open a transaction now with Dima for his online shop, and then that channel is going to stay online for how long, right? For a year, for 2 years, for 3 years? At what point is that still valuable to me? The idea of having a computer network make small transactions, I think, is potentially quite groundbreaking, because it's something that doesn't yet exist. But because it's something that doesn't yet exist, we have a hard time projecting like what kind of markets might exist for it. So we're currently unable to make a Hong Kong cent transaction. Like, we're unable to make it with cash because the coins don't exist anymore. We're unable to make it with a wire transfer. We're unable to make it with Octopus card. We're unable to make it with credit cards and PayPal for sure. But there's nothing for sale for that amount anyway. right? So then, what could possibly be for sale that costs only a cent? I'm thinking of like APIs. Currently, some good examples are, if you're familiar with like weather APIs, they cost money. If you're familiar with marinetraffic.com, if you want to look up the location of ships or the location flight radar, if you look up the location of airplanes, you can do that for free a few times a day. But if you want to do that all the time with your computer, then they're going to charge you for it. And with Lightning, they're really going to be able to charge you for it for every time you ask, and not make you sign up for its subscription. Maps data is also quite interesting. For like computing power, right? You currently have to really like manually sign up for an Amazon account and then select these products, and then you really have to consume a minimum amount of computing power for the credit card transaction to even be worth it. But if we had the ability to make small payments for them, maybe we'd have a better market for those things. Maybe my computer could very quickly shop around. I want to know what the humidity is right now in Sunset Bowl, and then I can look around like 5 different vendors who are willing to give me that answer, and I can shop for whoever is currently the cheapest. The fact that no accounts are necessary, I think, is I think the most important part is not even mentioned here. No accounts means that anybody can take part in this. Even if you're a machine, even if you're a computer, then you're able to join this. Currently, creating bank accounts for computers is pretty much impossible. You can create bank accounts for companies, and these companies can own the computers. If we're able to break down the economy to just single machines interacting with each other, and then maybe we have a lot more economic activity, and we can create a lot more value. But also, there's a significant number of individuals around the world that currently don't have access to the financial system, and they're unable to even rent a virtual private server right now, if they're not using Bitcoin. I think I'm doing quite well in time, and if you do have questions about how the Lightning Network functions, then now is the time. We'll probably continue with the demo part in 20 minutes. You can also come to me. Maybe you want to bring your laptop too. And if you have any issues with setting up these wallets, or if you already want to try them out. Thank you.